Diana, you've just recently returned from the CAGNY conference in Florida. Very nice. Companies and consumers, as we know, have been battling with inflation for some time now. So how do you think the industry is going to manage the balance between pricing and volume?
Yes, fantastic question, Rod. That was indeed the focus of the discussions by leading beauty, home, and personal care companies at the CAGNY conference. And that's because we are coming out of this unprecedented level of cost inflation that manufacturers naturally had to pass on. And the consumer was being squeezed really hard. So naturally, we see the volume pressure. And now this year will be really the focus, the priority for these companies is to return to volume growth and really convince consumers that their premium branded goods are worth paying for. And we saw in general that even though for the sector the volume has started stabilizing for by the end of the year, some companies are having to battle their own company specific issues, and we saw that with Kenvue, for instance, where they had missteps in their execution in the US in skincare that really disappointed in the fourth quarter. But yes, the key point is finding consumer relevant innovation that shoppers are willing to pay for.
Great. And what surprised you most out of the conference?
I think actually to that last point, it's how companies are really leveraging these AI assisted tools, artificial intelligence assisted technology and analytics in order to really realize that, to be able to put more consumer relevant innovation, products that the consumer cares about, much faster in the market. And we heard different examples from Colgate to L'Oreal. For instance, early tests by L'Oreal in just 4 countries show that they can reach about 10 to 15% productivity savings, which means each euro or pound or dollar that the company is spending will be just a bit further, and that's really key to increase the return on investment.
Great. And then maybe the final thing we should touch on before we finish is of course, China.
Mm.
And as you know, the recovery has stuttered a bit, hasn't lived up to hopes. Post-pandemic travel is still recovering. So what did you hear at the conference with regards to the Chinese consumer, but also how other emerging markets are featuring as well?
Yes, we would be remiss if we didn't mention China, wouldn't we? So China, it has been telegraphed by this company's management for the last year or so that the recovery would be gradual, but it's not living to the early expectations. So it's not, China will not grow at the same level it was growing before, and so companies are adapting to that. And there is a very conscious decision, or yes, a conscious decision that they cannot rely too much on China in order to grow. And India came up quite a few times as a potential offset to the slower growth in China. However, as some companies pointed out, the infrastructure needs to be there in order to support the level of sales that some analysts, some market players are expecting out of India.
Interesting, a pretty common thread, I think, with a lot of things related to India as well. Diana, thank you so much for your time. Very insightful. Appreciate it.
Thank you, Rod.